Hey, how's it going, everybody? Micah Lamar here from Wall Street IO, the #1 backtesting platform for swing traders and for option traders. I want to do a quick update for you today on Apple. I basically want to pick up right where we left off last weekend. I am going to keep this video short and sweet. I'll have my voice is lost. I got a little bit of a head cold over the last couple days, so apologize for that. But I do want to pick up right where we left off last week. And so we've been doing a lot of analysis on Apple's bullish payday cycles, especially since we had our services revenue breakout, which was basically from this point. On this point, if you go back to my videos from here, I said, hey, look, Apple's breaking out. I'm coining this as the services revenue breakout. The price is starting to accelerate, and we have this tremendous opportunity to trade Apple's bullish payday cycles either with stock or with calls. Now, from there, we have basically made a move from about $225 all the way to $280. It's been an incredible move. Now, if you take a look at these payday cycles over the last 3 years, 5 years, 10 years, on average, they last about 7 days. They generally last a little bit longer when Apple's in a really strong uptrend and all the indicators are confirming, which is what we've had for the last few months. Now, again, traditionally, they last about 7 days. If you remember from last week's video, we actually were on day 7 when I filmed last week's video. And my commentary was exactly this. Although we've moved 7 days, and 7 days is the average move, right, from here to here, I believed that we're forming what's called a double payday cycle, where we went up, we compressed, and then we started to break out above this compression point. So again, last week, even though we already had gone up 7 days, which was the average, I believed, and what I told you was that we're likely going to go up for at least a few more days. And so I was spot on with that. I hope you took some advice from there because we did continue up. Now, what's interesting here is we've now gone up 12 days, which does get really, really extended here. Now, when we look at the back testing for these payday cycles, there's a few things that I look at really closely. Okay, what we like to test here, this is my favorite Apple strategy. I like to buy on the first payday cycle bar, which is the green one here, when it's above the 21-day moving average, which it was on this last one. Sell on the first red one, which we haven't had yet, or sell on the 7th bullish one. Okay, now what I said last week though was I believed we're going to go up for a few more days, so like more like 10 days. So at that point, you actually would have been better to hold it. So rather than sell a 7 day, hold it for 8, 9, 10 days, something like that. Now, what I'm going to do right now is actually change this to 8 days, and I want you to look at this number right here and see how that changes the number. I'm going to go ahead and change it to 8. It should tick up just a little bit. Okay, now I'm going to change it to 9, as if you sold on day 9, right? If it got there, it's probably going to tick down a little bit. So I found this sweet spot on day 7, 8, and 9. And what that generally means is you don't need to get all out on day 7, but you could start to distribute a little bit of your profits. Maybe sell 20% of your position or 30% on day 7, another 30% on day 8, and the rest of it on day 9 or 10. Now what's interesting here is if you had actually taken profits here, which would have been 1, 2, 3, 4, 5, 6, 7, 8, day 8 or 9, which again was represented here in my back test, you actually would have been better off than trying to wait all the way till the end. Because if you look at the regular candlestick, we basically just compressed for the last 2 days. So while it had maintained a bullish payday cycle because the Heikin Ashi candles were green, we simply compressed. And if you're holding calls, you're losing out on theta decay during this compression. So you still would have actually been better off following the backtest results on taking profits towards that 8-9 day cycle. Okay, the results are still absolutely spectacular. Now, a couple things to consider here. We're forming another shelf. It is very rare for Apple to cycle over 12 days. We did it back here, right? I think we did 14 days, although that was a really good short actually on the 14th day. We dropped $5. We basically did the same thing here. Now, when we start to go up over 10 days in a row like we are now, when we do pull back, the stock generally drops $4 to $6 in a day when it pulls back. So have a little caution out there. We're really starting to get overextended. Now, because we have formed a shelf here, it gives us a really clear over-under area for Apple. If we can't get above and stay above 282, then I believe we're more likely going to compress or even pull back. The pullback point, right, is actually quite low. The first point of support is around 271, but then after that, we don't have a lot of support until about $250. And looking at the chart, it would actually make sense to pull back. Not sure if it's going to come back this far, but for it to retrace back, build a little bit of a base, and then continue up from there wouldn't be too crazy of an idea. Now, the good news is we have a really clear line in the sand here because we've already formed a shelf. We know the top is 282. If we can't get above it, then it's likely we're going to go sideways to down, okay, from here. Now, the stock's been really, really, really bullish here, okay, so it's not like you want to just go crazy short. But if we did pull back, we are right around the timing of when that would probably make sense. So keep your eyes on the 282 level. That'd be the level I'd be watching this week. We do have a shortened week. Tuesday, I believe we have half day for Christmas Eve. Christmas Day, Wednesday is closed, and then we're back open Thursday, Friday. Volume is generally kind of light. If you're holding calls that expire on Friday or the next week, just remember, your options continue to decay as the market's closed. So when the market's closed on Christmas, that theta decay, if your long options, is working against you. So in a lot of cases, people start to thin out their positions over Christmas unless you're positive theta and selling options. Okay? I hope you have a fantastic holiday and your Christmas and everything like that. This is Michael Lamar on behalf of the entire Wall Street AO team. I wish you good trading and a good day.